it sounds like there was a lot of interest fairly recently. Did this have to do with, was the timing of that had to do with you getting beyond the point where you were junk bond status and going into investment grade status on your bonds? Was there some other timing issue that investors looked at CV and thought, boy, this is a company to jump into?
You know, I think it could be the fact that the company was on the mend in terms of, you know, getting out of the junk bond status, improved regulatory relations, the new alternative regulatory program that's been in place is a very progressive plan for regulation and price changes over time. Bob Young's retirement may have been a factor as well, and you know, his announced retirement was more than a year ago at this point, I think, and you know, that's often a time when companies start to say, well, geez, if the CEO is going to be leaving, this is a good time to see if the company wants to be acquired, because sometimes what are called social issues like that can delay or thwart transactions. So that could have been a factor in terms of getting people thinking about Central Vermont again. But once you know, once we started the process, we reached out to others as well that, you know, we knew or Lazard knew would be potentially interested in an acquisition of this sort.
So it's been pretty much in the last year or so that there's more of a groundswell of interest in.
Yeah, I'd say since the fall, but you know, periodically from time to time over the years. I haven't been here, but I understand there have been approaches from time to time.
And Fortis has approached you before, as I understand.
They have years ago, and that was part of you know, some of the prior discussions.
When did you emerge from the junk bond status? Do you remember the timing of that? It seems like it was about a year ago or so, or in the last 12 months, it seems to.
I think it might be a little longer than that, but certainly I think in the last 2 years anyway, not too long ago.
I know you weren't involved in the company then, but what led to the company being in junk bond status? That doesn't seem like something a company would aspire to.
No, definitely, it's definitely not something you aspire to.
Yeah, but what led it into that position?
There were some financial issues in connection with write-offs and regulatory decisions years ago that came to roost, and the specifics of which, you know, I'm not really familiar with them. But I do know that once you get into that status, you aspire to get out of it as quickly as you possibly can.
But I would imagine that that's typical for a typical setup for acquisition.
Well, I think, but you know, when you're out of it, you're going to command a much better price for your shareholders. I think the company would have preferred to actually work its way out of that difficulty as it did, and then increase value for shareholders and sell after emerging from a problem like that. You don't want to sell at the bottom when unless you're desperate. You don't want to sell at a time when you're in trouble.
Yeah, you mentioned you were just one notch above junk bond status, so the goal obviously would be to be even higher. You would have gotten perhaps an even higher price for your shares.
Well, no, I think over time, you know, we would have, and we will continue to work our way up as our capital program is. We have a very large capital program right now, in the order of $100 million this year, with the acquisition of Vermont Marble and our smart grid program. So it's a very, you know, we've got a big capital program. As we get the bulk of that behind us and back to a more traditional $50–60 million capital budget, there'll be more room for investors to give us a higher bond rating, and actually the Fortis acquisition will help increase the bond rating, I'd expect, as well.
You mentioned that Fortis brings in a $21 million pot of investments that CVPS would not otherwise have had access to. Can you elaborate a little bit on what that money would be used for, and also put that dollar figure in perspective? I mean, given all of the energy upgrades that the state is talking about needing to do, how big of a difference can a $21 million worth of investment make?
One way to look at it is $21 million would probably pay for about a 5 megawatt solar photovoltaic project if you were to put it all into one place. You know, give you an order of magnitude. 5 megawatts is, you know, a very sizable solar photovoltaic project. It's just to give you so make it a little more tangible.
Can I have you make that even more tangible with how that translates to customers, or how much power will be produced? Yeah,
well, we have about 400 megawatts of peak load, so what's that? I can't do the math in my head, but 5 divided by 400 gives you a percentage of the total. You know, total load that we would be, maybe 1% of our total, you know, energy capacity would come from something like that. But the exact composition, that's just an example, the exact composition of how the money is spent is something we look forward to working out through the regulatory process with the Department of Public Service, other interested parties. And the key is that it has to be for something that we wouldn't have done otherwise. So it could be some sort of investment that we wouldn't have made, or it could be renewable energy, it could be demand response programs, it could be more energy efficiency that, or some transmission investment that wasn't within our capital plan. Exactly what it is, we don't know, and that's going to be, you know, both the fun and a good opportunity to work out through the process.
Do you have a time frame for making those investments?
Well, I think we'll sort out at least the process, you know, through the regulatory approval process over the next 6 months, and you know, 6 to 12 months, and we'll have at that point either you know, a plan or at least a program as to how we'll make those investments over time will be sorted out.
On the Yankee, once if Yankee is able to extend its license, why don't you just explain the revenue sharing piece going forward with Yankee? Is it just CD, or is it all the utilities?
No, I think Green Mountain and other utilities have it as well. The way that works is that if we don't have a new contract with VY, but the plant continues to run after March of 2012, we share in a 50-50 with the owners of the plant of power sales revenue that they make in excess of 6.1 cents per kilowatt hour. So if the market price is 7.1 cents, for example, that they're selling the power to the market, we get ½ a cent per kilowatt hour to, you know, is a bit of a credit for our customers. So if we're buying power at 7.1 cents in the market, and because that's what Entergy is selling it at, we get basically a discount of ½ a cent off that. So it's a hedge basically for the fact that we may not have a contract with them after the current contract expires. But if market prices should go up, we'll have something that will help us keep prices down.
And how did you come about that with that deal? Where did that come from?
That was negotiated back, I want to say 2002 or whenever the plant was actually sold to Entergy. So give me no credit whatsoever for that. It was smart people back then that thought of that.
It's even in what looks like a really good deal for shareholders. Inevitably, there's going to be someone who's going to at least rattle their saber about a shareholder lawsuit. Have you seen any of that come down the pike yet?
Yes, we have.
Is that just sort of boilerplate as part of the process, or do you see it as anything substantial in that?
We don't think there's any merits to any of this, any lawsuits like that. Some have been announced, one has actually been filed. It's an unfortunate part of mergers and acquisitions in our country today that these lawsuits happen, and parties will challenge the sale, even though it's a 44% premium for investors looking for something more.
Educate me on that. Why would they file a lawsuit
Objecting
to it if they're getting a 44% premium?
Well, that's the $64,000 question, isn't it? But that's what happens in any major transaction today, it seems to be. And you know, these things will be filed as class action type lawsuits or styled as class action lawsuits, and typically they end up being settled where before or after cases close, mergers close, with the attorneys that bring them being paid some fees for their protection of the parties that they represent.
Was there an impact on your stock price after this sale was announced?
Our stock price went up almost to $34 and change. So our stock price went very close to the $35.10 price that was announced in the transaction. And there's a little bit of a discount because it's reflecting the time value of money. The transaction isn't expected to close for 6 to 12 months, and there's some risk that it won't ever close. So there's obviously the price won't go up to the final price until the transaction closes. But right now, our investors have the opportunity to they've realized the vast majority of the benefits already.
So they could sell now, not even wait for the
They could,
transaction
they
to be
certainly could,
finalized.
they certainly could.
And there's also a possibility that some other huge corporation can come out and make you another offer, right? I mean, that'd be a possibility as well.
That happens in mergers and acquisitions from time to time as well.
Yeah, you probably can't, did you anticipate anything like that happening, or?
We don't, but, it certainly could happen, and,
Yeah.
the agreement that we have with Fortis contemplates that, and, the board, if something came through and it was a superior offer, the board would have to evaluate that.
And I think the buyout, you'll have to correct me if I'm wrong, I think the buyout for Fortis would be like 19.5 million, something like that.
That's correct. There's $17.5 million, what's called a breakup fee, that would have to be paid if we picked a better offer to Fortis, and their expenses up to $2 million. So it could be $19.5 million paid to them.
But you're not anticipating that, I'm guessing.
Well, no, I'm not, but you never know what's going to happen.
Typically, when you see what the company buying is not only looking at the profitability and seeing that I can make all this money that CVPS is currently paying their shareholders in dividends, etc. But they also look for other savings. One is in employment levels, and I think you're saying the employment levels are going to stay essentially the same.
Correct.
And then there's some back office expenses which could be say accounting or something, auditing, that sort of thing.
We'll see some savings in kind of the corporate overhead. So, for example, we won't have to prepare and mail out an annual report every year like we do today, and that will definitely be savings. We won't have necessarily all the same SEC reporting requirements that we have today. So we'll have some cost savings that will be passed on to customers as well from that sort of thing.
Will you stay on as CEO with a parent company?
Yes, I
Okay.
will, and as will the rest of the management team will be staying on. And that's one of the great things about this transaction, and the way Fortis looks at these transactions, as you'll hear when you talk to them. I think they'll tell you that the ones that work the very best for Fortis is when the management team carries on as if nothing happened. And that's what we're planning to do, keep doing a good job for customers and providing good service.
Yes, the other thing that frequently happens is that executive compensation goes down.
Well, that sounds like a very negative change.
Well, I was going to say, I hesitate to ask that, but typically you would see that the new company doesn't pay as well as the old company does.
Well, we haven't had any discussions about that
Okay.
whatsoever, but I'm sure they'll be fair, and we'll all be paid fairly going forward.
How about, you said there's going to be about a 90 megawatt hole in your portfolio. Do you see, given, as you said, given the prices today, do you see buying into long-term contracts anywhere similar to what GMP did with Seabrook, with anybody?
We're talking to NextEra. We have a meeting with them this week, and we're going to talk to them. We're going to be talking to TransCanada about the opportunity to perhaps buy some hydropower from the large dams on the Connecticut River to fill out our portfolio, and we're going to explore some opportunities in New York State with nuclear power from New York State and potentially other sources in New York as well. So we're looking at a wide variety of options, including Seabrook, but we don't feel a rush because while we want to put something in our portfolio, we don't feel that there's real urgency, because prices are very good right now, and we expect them to stay very good for quite some time.
Mary Powell made a point at GMP of saying that they're gonna hold some of their capacity out just so they could play the field, essentially, because they didn't want to put all their eggs in, fix it to long-term contracts. Are you looking at the same thing?
I think that's a smart strategy, to have a little bit that kind of goes up and down with the market. And when we have a surplus, we sell into the market. When we are short, we buy from the market on a short-term basis, and that's often a good way to manage a portfolio.